Yo, what's going on, everyone? Hope you're all having a fantastic start to the weekend. Today, we're going to be talking about Bitcoin's local structure in this video. We're going to be talking about the price action and what we can expect in the coming days or weeks by my narrowed down scenarios. To quickly recap from our last analysis, we were expecting a bounce from the lows to the upside to fill this large CME gap, and we got that out of the way, and that was a dead giveaway as an expectation, and we filled it right on the dot. We're now kind of fiddling within this region after that immediate rejection from the local top of this range, and now we need to figure out if this move here was considered a three-wave move, which is deemed corrective, or in simple terms, a dead cat bounce to many of you, or is this the beginning of a new trend to the upside, which is also now a possibility since we had a pretty strong 30% off of the lows. Now, one thing that I always mention is that we need conviction in this market, so I try to narrow down the scenarios as best as I can to focus on one narrative, and that one narrative is that we may be still in a bullish continuation for a possible macro wave 4 of the primary degree in yellow to be complete, as we did hit a lot of the minimum expectations for a wave 4 within the larger structure. So let's zoom in and see what we can see from the continued expectation to the upside or continued expectation to the downside. So if we have this current scenario as a possible termination of a wave 4, we're looking for a possible double zigzag that I've been explaining to you guys for quite a bit in my live streams and also from my social media. If we look at this, we have this as a possible WXY where we have two multiple zigzags within this corrective structure. So it's a double correction type structure where we're having a possible ABC going into wave W, any corrective structure for a wave X, and in this case we have a flat, and then we have a possible ABC going into a wave Y. Now this can be quite tricky in itself. We can be considering this as a possible impulse move to the downside or an ABC, but I like to have this as a possible WXY because we do have that potential rejection from these regions where we can still be working in a wave 4 and having this wave Y extend a little bit further in time and also in depth, meaning that this could be an ABC to the downside where we have a wave Y pending to still be completed. So if this WXY is complete, which is kind of my still primary expectation since we did bounce off of these lows without any real retracements, I do expect us to further move to the upside, and there are smaller wave counts that we can be discussing in just a moment. However, we need to be also talking about the possibility of an ABC correction that is also complete. So we have a possible leading diagonal going into wave A here. ABC, same idealized structure as a flat for wave B, and then this move here is just considered the same impulsive move. Now this move here as an ABC, a normal zigzag, is considered at peak validation. Anything further lower down breaking these lows will invalidate this, as we're not working with a WXY scenario. So that's why I like to work with a WXY scenario, because it does give us a little bit of room for the possibility based on the idea of these Fibonacci retracements or the trend-based Fibonacci extension, because we did hit that 100% zone that gives us that minimum expectation that we are now completed with the trend, but we also didn't meet quite the extended target of that 161.8%. We're kind of just in this no man's zone where we just went down and we wicked into it, but we didn't get into that possible 161.8 target, which is a pretty good target for a wave C in itself. But since this move off the lows is quite strong, this move here is now deemed possibly finished as a ABC move to the downside. Now this WXY scenario, like I've said, we have the possibility of extending our wave Y and have also our wave 4 terminate a little bit lower based on that Fibonacci extension if that 161.8% comes to play. But now we have to talk about the very shorter time frames or the micro time frames, because we really need to discuss if this move to the upside was corrective or not. Now, there are a few ways that we can be looking at this. I also discussed this in my yesterday's live stream where we have a possible diagonal going into wave 1. We have a possible new price extreme being created for wave B, and this is now considered a flat. This here is a 5-way move. We were expecting this to be the termination of wave 1, where we were expecting some kind of deeper wave 1-2 retracement, but that's fine. We had just a sideways structure for this wave 1-2, and this move here is now a completed trend to the upside. Now, we can have a little bit of different ways of interpreting this possible move to the upside, whether this is going to be continuing or not. Now, to me, I don't think this is a primary wave 3 degree here, where we have a short wave 3. We didn't hit the 1-to-1 extension target. So if you pull up a trend-based Fibonacci target extension, we see that a wave 3 is usually going to be at least going into anywhere in between the 100% and the 161.8%. But more ideally, we want to be hitting that 1.618%, 161.8% as our wave 3. So since that's not the case, and we're still looking for a wave 3 to the upside, we now have to be working in a possible nested structure, and we have to lower our degrees, and we may now be working in that 1, 2, 1-2 intermediate degree. Now, if this low breaks here, then we're not going to say that this is a 1-2 that's completed. We're going to be looking for a little bit of a deeper 1-2 here, where we may be working still in some kind of ABC or WXY to the downside that can still come back into the territory of that previous parent degree of that primary degree wave 1. So if that's the case, still gives us a relatively good look, and that myself is going to be the conviction for this account going forward. I do think that this wave 1-2 is now complete for sure. We're just now trying to figure out how this next nested structure of this intermediate degree wave 1-2 is going to be playing out. So this is just more of the local time frames. It's a little bit difficult to kind of predict on what's going to be happening, especially when it starts to get nested. But we do have a pretty clean 5-way move up for this wave 1 of the intermediate degree. So that's the kind of the way we can be doing it. Now, alternatively, I did say that we could be working for a possible deeper wave Y, and in the case we do, if we have counted this move as an ABC move to the downside, we can still ideally have the same idea of the leading diagonal going into not only a wave 1, but also a wave A, since that is the hybrid structure. Usually when you have a motive wave being built, you really have to work between two different scenarios when you're trying to figure out whether this is the continuation or the completion of a correction. And that's the problem with the Elliott Wave Theory in itself, because you really don't have enough conviction based on that alone. Since we didn't reach that 1-to-1 target, this now seems more corrective at this current stage than it is impulsive with the current data given. If we did breach above these levels here, I would have said that we may be working on that first nested structure to the upside. However, since the idea that we could be working in an ABC to the upside just seems a little bit more possible at this current stage, just with the current data given. But we don't know. That's why I have that 1-2-1-2 idea as the primary idea as well. So what we have here in terms of the expectation for a possible ABC or any ABC that for that matter is that we always look for a wave C target for looking for the 100% zone, because that's the equality or the equal length of a wave A over here. We always want to be looking for equality when we're looking for partner legs. And in this case for wave C, we've pretty much more or less hit that 100% zone for that wave C. So that's equal in length for this wave A. So that gives us the possibility that this may be a larger wave B, and this wave A could still be completed as a wave A instead of having that termination point for wave 4. So if that's the case, again, if we're working for a WXY to the downside, that wave Y, we're going to be completing this primary wave C to the downside for that larger degree wave 5, and we're now looking for an impulse move to the downside to complete this larger ABC to the downside. So obviously we don't want that to happen if we're a bull. Right now, that is the current case for how we could be looking at the local structure. And to kind of summarize it once more, is that this move here as an ABC, we did reach also into that 61.8% and that 78.6% zone of that golden Fibonacci retracing from this top to this low over here. So that is also another possibility that this rejection zone has a lot of merit as well. So one more time, this move here as an impulsive structure, although it's not invalidated right now, we still have a lot of time to kind of figure out how the markets want to play out over the weekend. We're still looking for a possible nested structure here, which is ultimately extremely bullish if we do complete some kind of 1-2, 1, 2, 3, 4, 5, 3 of the primary degree, 4 of the primary degree, and a 5 to the upside. That should be eventually breaking not only these major highs over here, but eventually breaking near the all-time highs before we create even a larger wave 1 degree, so that we can finally talk about what kind of pullback this move here is going to be happening before we move up for a larger primary degree wave 5 of the macro structure. So hopefully that was helpful, ladies and gentlemen. We have those 3 ways, or 2 ways rather, on how we can see the local structure. It just really boils down how you want to seeing it. It's just at this current time of recording, we have 2 scenarios that are overlapping with each other, either as a corrective structure or either as a 1-2-1-2 idea, and we may be working out of here. I'm kind of still leaning towards the more bullish option, since that is the current conviction that I had, and I was originally talking about that on the larger time frames where we had that termination point for a wave Y or a wave C if you're seeing this as a double zigzag or a normal zigzag structure. So hopefully that was helpful, ladies and gentlemen. I'll see you guys in the next video. Please write down in the comment section below on what you think is going to be happening, and hopefully you guys have a fantastic weekend. I'll have more videos coming out again. Thank you very much. Bye-bye.